It's the end of the day with Ray. Hello, my friends. Well, today we're going to jump on that Sharp Interactive board. I want to go through Konica Minolta's FY 2022. The numbers are in. The numbers are terrible. Third consecutive year of losses. I just want to set the tone because I'm sure that my friends, those friends of mine that sell supply and service print equipment, have read our industry's reports about Konica Minolta's FY 2022. I mean, it doesn't matter what venue you read the report on. They all wrote exactly the same thing. Everything's fantastic over at Konica Minolta. Things are looking up. They even mentioned an IDC report. Wait till I get to that on today's episode. Totally insane. Ladies and gentlemen, our industry has gaslighted the realities around Konica Minolta for over 3 years. I've been screaming at you that this company has an inability to make profit. And I get it. They can have a quarter good here or there. But at the end of the day, it's about what happens at the end of the year. I mean, it's amazing to me that in the third quarter, the whole industry thought things were coming back. Everything's going to be great. They put some operating profit in the fourth quarter, but then they had this massive impairment charge. It's like they don't even know what's going to happen 6 months later. Like, you can't tell me that 6 months into last year, they didn't know that they were going to be in a disaster. They couldn't prepare the marketplace for it. They couldn't have real conversations about that. They wait till, what, 10 days before they're going to publish their financials and tell the whole world it's going to be the worst year they've ever had profit-wise in their history, their 150-year history. Ladies and gentlemen, I believe Konica Minolta is running their business like just from the hip. They're just shooting from the hip. Hope it works out. I don't believe they have real plans. I don't believe they're midterm, long-term. None of it matters. I believe their projections are ridiculous. I've been talking about that for a while. I'm going to share some thoughts on that when I share their projections. Their inability to produce operating profit is crippling the company. They have massive cost problems, and they're not isolating where those cost problems are. And I believe most of the cost problems are in all this nonsensical crap they bought. They bought a whole lot of assets. And if you look at their liabilities and the growth of their liabilities over the last year, folks, here's the deal. You can grow through debt. But if you're going to grow through debt, you better be able to sell the stuff in the marketplace with pretty good profit, so you can make sure you can maintain as a going concern. So without any further ado, let's just jump on that Sharp Interactive board. I want to share my thoughts. First thing I want to do is I want to share this, and this came out of the summary of the consolidated financial reports for the fiscal year ending March 31st of 2023, right off of Konica's website. Let me just read this to you, because this kind of sets the tone of the seriousness that's going on over there at Konica Minolta regarding their financial situation. Significant events regarding premise of going concern. There's people out there that have a concern whether or not Konica Minolta can maintain as a going concern. That's a reality. Let me read this to you. As a result of recording significant impairment losses for the current fiscal year, the company recorded operating losses for the third consecutive fiscal year as of the end of the current fiscal year and breached financial covenants stipulated in some of the syndicated loan agreements and other agreements executed between the company and multiple financial institutions, which stipulate that the company shall not record operating losses for 2 consecutive fiscal years. Well, they had operating losses for 3 consecutive years, so therefore they breached the financial covenants. That's a reality. And Konica Minolta saying it'll be okay. Let me just read it. Let me finish reading this, and I'll give you my point of view. The company has, at the end of the year, obtained the consent from all relevant financial institutions not to request the company to forfeit the benefit of time due to this breach. Thus, the company believed there is no significant uncertainties regarding the premise of going concern. What they're trying to tell you here, in layman's language, is they went and begged all the financial companies they owe money to not call their notes, because they all could have. And if they did call their notes, that webinar that Sam Arago had here in the United States would have been a whole different conversation, wouldn't it have been? Talking about how they're going to dissolve the company. They got to pass. That's all it was. But they better figure out how to make sure that this coming year, FY 2023, doesn't have any losses, because I assure you if it does, it's going to be hell to pay at Konica Minolta. I think the creditors are going to say enough is enough. They're on a slippery, slippery slope. Ladies and gentlemen, Konica Minolta right now has $6.5 billion in liabilities. That's an 80% of total revenue. $6.5 billion in liabilities. That's 80% of total revenue. They increased their liabilities in FY 2022 by $975.4 million, nearly $1 billion. That's telling you Konica Minolta is growing through debt. And eventually, it's going to catch up to them. It actually did catch up to them because they had 2 consecutive years of losses, and they breached the financial covenants. They just got a pass. I want to talk about a couple questions that were asked by the financial analyst. Not our industry's analysts, because they don't ask any questions. They just take notes. These were financial analysts. They asked a couple of questions. They asked a lot of them. I'm going to go through a couple of these. But listen to this first question. What are your thoughts on medium to long-term growth? Will you aim to achieve profitability for the time being without aiming for stretch? Please also tell us about the direction of M&A. Because, you know, all these investors are looking at Konica Minolta buying up all this growth. Chasing revenue at all costs has to end, and we have to replace it with profitability, right? Focus on profitability. Orlando Bravo said that. Listen to their answer. Looking ahead to fiscal 2026 and beyond, strategic investments in areas that need to be strengthened will be an option. We do not think that we will completely stop M&A because of the large impairment losses this time. However, we will check the value of our investments even more strictly than before. I just put this in red. I'm saying you're not going to buy any more Forzas then. And the reason I'm using Forza is because we all know that Forza, well, let's just say it wasn't doing really well when Konica bought it. And of course, if Forza was knocking out of the park and there wasn't any issues with that, and that wasn't like an auction in the middle of the night, and the private equity group that backed Forza didn't lose any kind of money, you know, Forza's more welcome to talk about that. But they never have, and I'm bringing it up now for about 3 years. But our industry knows that that was pretty much a train wreck. And the reason I'm bringing it up again is because they bought a lot of companies underneath all covered. Konica Minolta bought a lot of companies like Forza, and I'm starting to believe that everything they bought, for the most part, was in the same kind of situation Forza was in. Desperate companies getting gobbled up by an OEM in the print sector who had unrealistic optimism about what they were going to do with those assets they gobbled up. That's a fact. Until they can prove to me otherwise. But Konica Minolta has never shared any of the real details around any of these acquisitions, any of the real details around all covered. I've been complaining about that for a long, long time. But the financial analysts, they're starting to ask pretty good questions. In the past, you made a bold management decision to withdraw from and transfer the camera and film business. Please tell us the positioning of the office business. What a fantastic question. This analyst actually is putting the office business for Konica Minolta in the same boat as cameras and film. Think about how bizarre that is. Because this analyst, well, they know that no one's going to print more tomorrow than they print today, and they're very concerned about the office business. And the reason they're so concerned about the office business is because Konica Minolta doesn't share any of the details around anything else besides print. They call it DW and DX, and everything's going to go great, and it's all lumped together. Could you imagine if there was real successes around this DW and DX from an operating profit standpoint that they could share with these analysts so that the analysts wouldn't be so concerned when people stopped printing? Konica Minolta didn't even address that. You know what they addressed? They addressed the printing piece, which proves to me that Konica Minolta does not have a plan to deliver non-print related services into the marketplace profitably. Otherwise, they would have talked about it right here. It would have been a perfect opportunity. Listen to what they said. You talked about the withdrawal of the camera and film business. At that time, digital cameras emerged as an alternative means of film cameras. However, in the case of printing, mobile devices cannot completely replace printing. We do not believe that the demand will become zero. They're talking about print volumes and the demand of print becoming zero. No one would ever. Folks, this is nuts. Are they going to wait till the print demand is zero and then they're going to figure out what they're going to do with the office business unit? This is telling me, I'm telling you, this is how they're thinking. And the analysts, they just need to have another follow-up question. See, could you imagine if they would have asked a follow-up question regarding the DWDX division within this office business? I'm telling you, folks, the analysts are going to get there. Hopefully they're watching the end of the day with Ray. The other thing, this question, I want to read this question. I'm going to dig more into this. But there's a put option on the table between Konica. Here's the deal. Back in 2017, a company called Innovation Network Corporation of Japan did a deal with Konica Minolta, and they bought Ambry Genetics. And part of that deal was a put, which means at a certain period of time, this Innovation Network Corporation of Japan is going to sell their interest to Konica Minolta, and Konica Minolta has to buy it. And this is the question from the analyst. And that put option's coming up. And I'll do some more research on that, but I believe that's coming up in the next couple of years. Here's the question. I think you will also place emphasis on your financial position, partly due to the large impairment losses in FY 2022. I think the impairment losses this time have generally reduced some risk. But there are also risks, such as additional impairment losses. I agree with that, by the way. They will have more impairment losses. And I'll get to that in a minute. And the timing of the exercise of put options by INCJ, which is Innovation Network Corporation of Japan. So they know this is coming, and they're asking them this. Did the financial institutions sign the waiver as they recognize and understood these additional risks? Please also tell us your thoughts on reducing dividends. Here's their answer. We explained midterm business plan to financial institutions and reached an agreement on our capital policies that we will allocate a half to business investment. As our shareholders' equity has been impaired, we will recover dividends as we recover earnings. Of course, they're not going to pay dividends when they're losing money. And at the end of the day, the bottom line is, could you imagine if there was a put and that put was exercised this year or next year? Ladies and gentlemen, I'm going to dig deeper into this because I think this is pretty interesting. I want to show one slide here real quick. I was thinking about October of 2017. Back in October of 2017, Konica Minolta stock was $6.86. I did use today's yen number, but so the spread will be the same. And today it's $3.39. So you can see it's 51% decline in value since 2017. I wanted to jump into this. This was from an article that was published in the Konica report. Scott Cullen was the author. Here's part of that article because this is so bizarre to me that I want to point it out because this is typical of our industry. This is probably one of the greatest gaslighting things I've ever seen in my life. The title of this section of his article, accentuating the positive. Let's talk about the positive stuff. Let's not talk about anything negative. Let's only talk about the positive stuff. Let's just ignore all the negative stuff. Let's pile more opportunity on the bad stuff. Oh my gosh, folks, it's just crazy stuff. After a deep dive into the various segments of the business outside the U.S. that were underperforming and the reasons for their disappointing performance, Arago switched gears and shared recent positive developments, including market share numbers from IDC. As of the first quarter of 2023, IDC reported that Konica Minolta had a market share of 15.7% for the office and production print markets, up from 12.8% in the second quarter of 2022. Who the hell cares? Think about this. Sam actually pivoted the conversation. He wanted to talk about an IDC report that shows they have growth in market share. And that they're right in line. They're catching up to. They're fourth after Canon, Ricoh, and Xerox. They're catching up to them. Ladies and gentlemen, here's what I'll tell you. Konica Minolta, if Canon decided to operate their company on a 2% operating profit for their print business, how many more MFPs would they sell in the marketplace? If they decided to chase revenue at all costs, how many more machines could they put out there? No, they actually focus on the profitability of a company. I cannot believe that you're talking about this is such gaslighting. It's absurd. You're talking about an IDC report talking about your market share when your company just now hit a profit in the category of digital workplace. Okay, after 2 years, 3 years almost. And so you're going to brag about market share growth, and the reality of it is you're comparing the growth against 2021, which was a year you didn't have any equipment to ship anybody. This is just so absurd, and it's just so distracting. And so I did my own rating. You know, Konica likes the awards, the rating, where they're at. I rated Canon, Konica, Ricoh, and Xerox, and Konica came dead last in producing profit. Dead last. They're the last ones. They're the last company that can produce profit. Ricoh's getting close to them. Let me read this other thing they put in this article. Total company revenue in the U.S. and Canada was up 17.6% year over year, with U.S. independent dealer channel revenues up 21.7%. Canada was also up 21.7%. Konica Minolta's direct channel was up 16.3%. Who gives a crap about all these percentages? Who gives a crap? Why aren't you talking about the real problems you're having over there? And if you have really good stuff to share about this DW and DX, the company's DX business, including IMM, Managed IT, and Mobotics, was up 7.6%. Production Print was up 9.3%. Those are solid results despite the turmoil we face at Eric. What? Let's be real about this. And I've shared these numbers before this breakout. Digital Workplace, the global number for all of Digital Workplace, is $4.3 billion. The United States represents 34% of that revenue, according to Konica Minolta's own numbers. That would be $1.4 billion. The DWDX is $710.2 million for the whole globe. 34% of that number is $241.5 million here in the United States. So of the $241.5 million here in the United States, how much of that's really services around All Covered, all those assets you bought under All Covered? At the end of the day, the number for the DWDX as a percentage of the Digital Workplace for the Americas is 17%. If you add in the professional print business to that for the Americas, it drops it down to 12%. Konica Minolta has owned All Covered for over a decade and all these other assets to try to get into the marketplace and build something, additional revenues and profits outside of print. And after all of that time, it's still less than 15% as a total. And it's only 17% if you pull out the professional print. But I got to tell you something. Without the professional print and without the Digital Workplace business, there would be no DWDX. There would be no, if the MFPs all left those offices, they would be crippled. Because they can't prove to the world they can make any money in the DWDX space because they're not proving to the world they are. Let's look at the top line revenue for the whole company for FY 2022 was $8.1 billion. Total company had a $680 million loss. $680 million operating loss on $8.1 billion. Third year in a row. And folks, let's just recap it. FY 20 and FY 21 totaled with FY 22 is $974 million in operating loss over 3 years. That's the reality. In their numbers, they actually shared what the number would be without the impairment. I didn't even bring it up when I had the slide up there because I think it's just the stupidest thing I ever heard. So I wanted to show this slide instead. This is a police officer pulling over somebody. This is what they're saying. When you are not impaired, you drive great. I mean, folks, what the hell? Nobody cares what it would have been without the impairment. You had the impairment. Nobody cares. You know, what are these people? This is what we could have done. Could have done this, could have done that. Well, you didn't do any of that. Next time the cop pulls you over, you know, oh, I drive really good when I'm not impaired. Let's look at the Digital Workplace and the Production Print, ladies and gentlemen, for FY 2022. The numbers are in. $4.3 billion in top-line revenue for Digital Workplace, $1.8 billion for top-line revenue professional print. That's a total of $6.1 billion for those two categories. The operating profit for Digital Workplace was $66.5 million. For net professional print was $118.7 million. Total about 2.93%. The total operating profit was $185.2 million. Yes, Konica Minolta had some operating profit in the Digital Workplace and the professional print. But folks, we got to put this all in perspective. If you go back over those last 2 years and then add in this third year, the operating profit on $11 billion worth of revenue. $11 billion worth of revenue in the Digital Workplace was less than 0.03%. The operating profit on $2.6 billion in revenue of professional print, okay, for that same period of time, was 2.7. Digital Workplace and professional print together had an operating profit over the last 36 months on $13.6 billion in revenue of 0.54%. There's nothing to write home about. And Konica Minolta, I still want to ask this question, so I'm going to ask it again of you. In the corporate etc. for the years 2020, 2021 and 2022, there's $355.5 million in losses over those last 3 years. How much cost is coming out of either professional print or digital workplace? What cost are you shifting out of those categories, moving it down to etc., so that the operating profit looks better for professional print or digital workplace? If you're not doing it, that would be fantastic. But here's what I find so amazing. There's never any details about that corporate etc. And when the company as a whole has lost money for 3 years in a row, I think it's time to really start digging deeper into this. And don't forget, back in 2021, they had a $77.7 million impairment. And by the way, that $77.7 million impairment in 2021, the world knew about that, well, what, about 10, 15 days before the year-end financials came out. So here's the deal, folks. Konica Minolta has got to figure out how to make operating profit. And they've got to figure out how to get some more discipline. I wanted to look at this, and I'm going to talk more about this in future episodes, but I want to talk about Charterhouse PM. Charterhouse PM is a marketing company that Konica Minolta bought, and they bought that company back in November of 2012. They have a marketing services business that sits inside this professional print business that did $417.4 million last year. I would really like to know some more details on that. Because if a marketing company is doing $417.4 million in revenue, they would be making a lot of profit. That's a pretty good services, right? Marketing services. Wouldn't it be nice to know what the profitability was on that $417.4 million? And why in the world is this marketing services company into this professional print business unit? Why is it even there to begin with? I think that belongs more into the digital workplace. More of that DWDX strategy, wouldn't you? But anyway, I'm sitting here thinking about that. That revenue in the marketing services is twice as much almost as the revenue that's coming out of industrial print. And if you look at the production print, it does $1.1 billion for the year. So we got a total. Folks, here's the deal. You got this professional print business that's doing $1.1 billion in production print, $231.5 million in industrial print, and it's doing $417.4 million in marketing services. And it has 7% operating profit, $118.8 million. Wouldn't it be nice to know where that operating profit's coming from? Because that's something scary to pay attention to. Here's the digital workplace. I'm not going to get too much into this. I've been beating Konica up about this whole thing. It's just nutty to me. Okay? Digital workplace, all the MFPs going into all the offices all over the world, you know, and that's in that office space. And then we got this DWDX that has the workplace hub and all the IT stuff and all that. That DWDX for the whole entire world is a total of $710.2 million. And folks, we already know the math for the United States, about $241 million, 35% of the number. But Konica Minolta, 2% operating profit on all of this for the year. And I don't really care when they have these quarters and what it would be without the impairment and all this crazy stuff. You could see how the operating profit is a goal thing. They've never hit it out of the park. Never once in a long, long time inside this digital workplace category. And they really need to share more details on that. Ladies and gentlemen, there's a lot more to talk about regarding Konica Minolta and their FY 2022 numbers. And I'm going to dig into it. I'm going to dig a little bit more into that put. I'm going to dig a little bit more into their liabilities compared to their assets, because that's pretty out of skew when you compare them to everybody else. And at the end of the day, I'm going to ask our industry, all those friends of mine that sell supply and service print equipment, to hold accountable your analysts and make those analysts do a little bit more work. And I'll be real honest with you, folks. I find it amazing that when a company has to talk their creditors into not calling their notes because they've had 3 consecutive years of losses, our industry wants to talk about an IDC report showing they had market share. A lot of crazy stuff in our industry, but that's got to be one of the craziest I think I've ever heard. Just something to think about, my friends, because we all know this. Status quo is the killer of all that'll be invented. Don't get stuck at status quo, and I'll see y'all tomorrow.